gold price in foreign currencies, and we've seen that it's reached all-time highs versus the Australian dollar. It's close to an all-time high versus the Canadian dollar. It's an all-time high versus Brazilian real, Argentine peso. A number of currencies, gold has really soared, and that's a function of those currencies becoming weaker versus the dollar. And the dollar and the gold, they're the real battle royale. They are the ones, they're the two strongest currencies in the world, and eventually gold will win.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. At SDBullion.com, you can order your guaranteed physical precious metal bullion products online, 24 hours a day, 7 days a week. Visit SDBullion.com for more information.
Welcome to another Silver Doctors exclusive interview. Today, I'm excited to have returning guest, Mrs. Louis Cammarosano from smallgold.com. Today, he's joining us to share his thoughts on the global economy, the financial markets, and a variety of other subjects. So, Louis, welcome back to Silver Doctors.
Well, thanks for having me back, Mike.
Well, I appreciate you taking time to sit down with us. Definitely looking forward to finding out what your thoughts are. What are some things that you're keeping an eye on? And so, just to start this interview off, I want to know what are some things that Louis is keeping an eye on, whether it be in the metals market, cryptos, or just the global economy in general. What are some things that have you more so concerned right now?
Well, there's two things that have me concerned. One is gold breaking above 1350 and holding that. And I'll talk about why I think that's important for gold and silver. And the other is this phony debate between gold and Bitcoin. I think a lot of the gold sellers are missing the point by attacking Bitcoin merely because some Bitcoin promoter did the drop gold campaign. So let's start with the price of gold. And gold, if you take a look at a chart, has had a lot of trouble getting past that 1350, 1365 line. I know Turd Ferguson's discussed this. A lot of people have looked at it and say that's kind of the point where it looks like it gets smacked down from there. Now, the reason that's important for silver is, one of my theories on silver is that because silver has a lower percentage of investment demand as part of its demand profile, in order for silver to catch a bid, gold has to catch one. So if gold starts to move higher, then people will start to look at silver and say, well, you know, there's that monetary component in there that's been dormant for a while. We got to get into some silver. And when that happens, there's very little silver in terms of overall amounts because it's such a small market. Then it starts to take off. And you see it in 1980, it happened, 79, 80, and you saw it in 2010, 2011. Those are periods where gold was on a monetary ride. You had the inflation of the 70s. You had the QE of the 2008, 2009 period. Got a lot of people worried and had them running for monetary safety. And gold goes first. And then they start to look at silver. So I think it's very important that gold gets above that 1350. But we've had these false starts, and a lot of them have been because a lot of the issues in the economy, the debt, whatever the issues are, they've seemed to forestall the issues. We talked about this, Mike. You and I did an interview, I don't know, maybe it was 3 or 4 years ago. We talked about how the debt had to be cleansed from the system back then, and all we've seen since then is a tremendous amount of global debt being added to the system. China going 3x the U.S. debt. You have now trillions of dollars of negative interest rate debt. It's just exploded, and that's how they create economic growth, so to speak, is by boosting asset prices, dropping interest rates. And everyone says there's only so long that can go on, but it keeps going on. So I'm looking to see the canary in the coal mine, gold, get its head above 1365 and really aggressively affirm that it's going to be in a bull market before I expect to see silver.
Right. Now, do you necessarily believe that we have to see gold in the U.S. go above 1350 plus in order for it to be considered, like in a global sense, to be in a bull run? When you look at other countries and their issues, the price in their particular currencies will probably already indicate that in that nation there that's already having some currency issues, that their price there has continued going up. So do you necessarily need to have it in the U.S., or can you utilize some of the measurements from other currencies in other countries based upon those problems to kind of say we're already in a bull market, perhaps?
Yeah, so we were looking at gold price in foreign currencies, and we've seen that it's reached all-time highs versus the Australian dollar. It's close to an all-time high versus the Canadian dollar. It's an all-time high versus Brazil, Brazilian real, Argentine peso. A number of currencies, gold has really soared, and that's a function of those currencies becoming weaker versus the dollar. And the dollar and the gold, they're the real battle royale. They are the ones, they're the two strongest currencies in the world, and eventually gold will win. It's just that the dollar has been and is the centerpiece of the global fiat system. It's the one that has the most liquidity. It is the one that all this debt that's being issued, most of it's dollar denominated debt, and that creates demand for the dollar as a liquid currency, whereas gold holds its demand as an anchor against the profligacy of all this this money printing. So gold does have to beat the dollar, so to speak, get above that 1300. It's already beaten the peso, and it's beaten the Turkish lira, and it's beaten the Australian dollar, but it has to beat the dollar. And we've seen that it's a hard putt because the dollar is the center of the fiat system and the world runs on the dollar. And that's where we're having the difficulty.
Right. Now, in regards to gold and reposition it and for future purposes, I guess, in our monetary system, what are your thoughts on, I think it was back in April where the BIS officially announced that gold can be considered an actual asset class on the commercial banks' balance sheets. And so what are your thoughts on why now? Is that by coincidence, or is just or early steps for preparation of moving gold back into the monetary system? And then more importantly, why has China and Russia been accumulating so much gold? Is that coincidental as well, or do they have some plans for the future of gold?
Well, the Basel thing has been in the works for a long time, and it only makes sense that gold should be a tier one asset because it historically has been what central banks have held. When you have the classical gold standard, that was the anchor to all the currency. So that's no surprise to me. Now, what Russia's doing, what China's doing are two different things. Russia, the Central Bank of Russia, has this third largest gold production facilities in the world, and Russia is at odds with the United States. It's at odds with the dollar. It does very little trade with the United States, so it really doesn't make sense for it to hold a lot of U.S. treasuries. And because they have a lot of gold that they can mine, then what they've been doing over the past 5 years is an increasing amount of their domestic gold mining production. The last 2 years, about 87-88% of it, they have just slapped right into their central bank's balance sheet. Now, from what the Central Bank of Russia has been saying, is they like that because it solidifies their reserve position, but they're not doing that in order to trade gold. I think a lot of people get confused. They think that a gold-backed currency means that the currency's backed by gold, and then somehow it's going to be like the Bretton Woods where you can redeem dollars for rubles. No country wants to do that. You'll just get drained of your gold. What Russia is talking about, and it's experimental, is similar to the gold trade note, but some type of gold-backed cryptocurrency where you would settle your trades in gold. And that makes sense because there's a difference between holding dollars as a reserve and then holding dollars in order to transact. And it's the same with gold. So I think the gold that Russia is accumulating is not to transact. It's really to hold as a reserve, which is as good, if not better in most cases, than the dollar. Now, China is entirely different because the Russian central bank has got about 500 billion in reserve assets, of which about 19% are gold. They have about 80-90 billion dollars worth of gold, which is not, when you think about it, even though they have the fifth largest gold hoard among central banks, it's only worth $90 billion. So that's important to keep in mind. Now, China, people confuse what the Central Bank of China has and what the country of China has. And it's really no different than India in a sense, in that both countries, you can do back of the envelopes calculations on how much both countries have through imports that are publicly available into China, through China's domestic gold mining production, which is number one in the world, about 450 tons a year, whereas India has none, so they have to import all of their gold. And then historically what's been in the country, look at the Shanghai Gold Exchange and so on. And you can get to a calculation. A lot of people say China and India have about 24 to 30,000 tons each in the country. But the Central Bank of China, People's Bank of China, lists only about 1,800 tons or so. And a lot of people say, well, they're lying because of that. No, I don't think they're lying. I think that's just that the country itself has in its sovereign wealth funds and its other subsidiary banks and state-owned banks. There's plenty of gold in China, but it's not on the central bank's balance sheet. And the reason that China's adding gold the last 6 months is they're now starting to rebuild their gold position. Remember, they used to have about 4 trillion in foreign reserves, and they've sold down about 1 trillion in order to support. And so what's happened now is that they're rebuilding the reserves, and of course, some of that money is going to be allocated towards gold. So it makes a lot of sense. But this idea that they're going to back their currencies, that's not what they want to do. Right now, the entire world is on a fiat system. China needs to issue debt. If it somehow were to tie the yuan to gold, that would eliminate their ability to do all this massive stimulus that they do. Russia's actually, just for stable central banks, is in the best position because they don't operate on debt. They don't have a lot of external debt. They don't have a lot of internal debt. And they have $500 billion worth of reserves, of which 19-20% are in gold. So they're having it, and it's useful to have those reserves. Venezuela had gold reserves, and unfortunately they had to sell them, but that's why you have gold. Gold is insurance. Gold is an emergency fund. Venezuela screwed up so much, they pretty much had to shovel out all their existing gold. So I think they're holding it because they need to have some type of anchor that isn't the dollar, which makes sense because if there is a currency crisis, eventually it will hit the dollar and you've got to have gold, but they don't have nearly enough gold to cover, the amount of dollars that are in the system. No one does. There's not enough gold unless gold gets priced 10, 20x to cover, all the transactions and the value of the fiat currency system and all the debt that has to be liquidated.
Right. Now, just recently, I think it was yesterday, I saw an article about from this past weekend at the Economic Forum over in Russia that China and Russia both had, and they came up with more bilateral swaps and agreements and all types of things like that. And I guess Putin gave a speech referencing that the world needs to begin not necessarily rethinking, but reconsidering the options or alternatives to dollars. And so do you think that there's going to become a more increased push to de-dollarize their economies? And then if they end up doing such, what would be some options? What will be the next reserve or ideal use for international trade if people are talking about eliminating or lessening the role of the dollar?
I think it's easier said than done, especially for China, because China runs on dollars. All their state-owned enterprises, their state-owned banks issue dollar-denominated debt. They really can't extricate themselves from that perspective because they have too much trade with other countries that are relying on the dollar. Russia can do it. Russia doesn't have a lot of dollar-denominated trade. It can create other types of alternative currencies. That's what the central bank president has said. In fact, they prefer not to set up a gold-backed cryptocurrency. They would like to trade in other currencies. The problem is, if you're Russia and you want to trade with Iran, even though you don't like the dollar, you probably want the dollar instead of Iranian rial. So you're going to accept the dollar. And that's probably why they're looking to use maybe different currencies. Problem with the yuan is that it's always subject to devaluation, and they want it to be weak. So it hasn't really taken off as a reserve currency. The top reserve currencies are the dollar, the euro, the Japanese yen, Swiss franc, Australian dollar, Canadian dollar, and then the Chinese yuan. So yuan is not desired as a reserve or tradable currency. So now if you're going to go from the dollar, you got to go down to the euro. Well, the euro's got very similar problems to the dollar. Its QE program right now is larger than the 3 QEs that the U.S. did. Europe, in many respects, is a vassal state economically to the United States. And then, okay, what about the Japanese yen? Well, the Bank of Japan monetizes all the debt that the Bank of Japan issues. They probably have 60-70% of the stock market ETFs. So none of these currencies are really a viable alternative. That's why people look to gold. But the problem, most countries don't want to move into gold because they know that their liquidity is going to be restricted. They can't do all types of domestic stuff that they want to do, like print money. And look at China. I mean, they have to do a different stimulus all the time. You can't do that if you're tied to gold.
So it looks like based upon last week, Jerome Powell came out and mentioned that he'll be willing to do pretty much whatever it takes to keep this economic expansion going. I'm assuming they're starting to come to the realization that the economy is slowing down, even though most people in the alternative world has known that for quite some time now.
Right.
What are your thoughts on the economic slowdown and the response that could be coming, given the fact they're talking about interest rate cuts, and how all that play out?
Well, I think I predicted earlier this year that the Fed would be pushed very hard to cut rates. And remember, during the Obama administration and during the Yellen reign, they talked about when they were doing QE3 in 2013 and 14, they were very smart. They always talked about, we're going to taper it. We're going to taper it. They never tapered it. And then when they finally tapered it, it was like a year and a half later from when they started talking about it. Then they started talking about, we're going to raise rates after we end QE. It took them over a year, almost a year, a little over, to the end of 2015 when they finally raised rates once. Then they talked about it all through 2016 and only raised them once. And then finally, when Trump came into office, and I think they've raised them 6 or 7 times, and that had Trump on the warpath because he's been threatening Powell. He's been talking publicly about firing Powell. And we all know that the Fed is independent, so to speak, meaning that it's not part of the government. It's not like any other central bank. The other central banks are basically arms of the country's treasury. The central bank is that weird, a Fed is that weird creature from 1913, the creature from Jekyll Island, where it's semi-independent, but it gets appointed by politicians. And we've seen through history where politicians like Nixon all the way now to Trump have pressured Fed presidents to keep monetary policy loose to help their re-election campaigns. And that's exactly what you're seeing here now. Trump's probably best re-election bid is not his charm and his style. It is that the economy is doing well. The Federal Reserve has always tried to maintain its, quote, independence, but it does know that they are political appointees. And I think Powell has finally been browbeaten enough to realize. And also, the other thing the Fed doesn't want is they don't want to be blamed for anything. They're always willing to take credit for fixing the economy. They ruin the economy and then they say, well, we fixed it. They don't want all this public information out there that Trump has been saying, hey, you're ruining the economy, you're raising rates, or you're not lowering rates. And then it turns out that there is a recession and they say, well, it could have been prevented. They don't want that negative brand to happen, especially when the rest of the world, India, Australia, they all have low rates, they're cutting rates, and the U.S. is going the other direction, which makes sense. It makes sense that the United States, because it's the world reserve currency, shouldn't have negative interest rates, should pay a rate of interest. Let the other central banks have negative interest rates and do QE. But the U.S., the dollar is supposed to be something a little more stable than having negative interest rates and just printing dollars and monetizing debt.
So in your opinion, recession indicators, there's been so many indicators coming out about the yield curve inversion. We have slowdown in manufacturing and so many other indicators. What are your thoughts? What's your official thought on where the economy is at this current moment? I mean, are we actually in a recession or what?
Well, I don't think whatever I say is official, but I think that the way they've calculated GDP and they've recalculated how they calculate GDP, it's all relative. So we're not in a recession according to the way they calculate it because it's higher than it was before the GDP. But the real measure of the economy is how many people have jobs and how many people have good jobs. And, the employment, I think, picture is mixed. I don't think you see a lot of people. There's not a lot of real wealth generation. Yes, people have jobs. Maybe they're not part-time. And there are some. We have to give credit. There are some manufacturing jobs that didn't exist. But you're talking the hundreds of thousands. You're not talking millions and millions of jobs there. So there's been some improvement there. But I think the economy's been on a slow burn since, the financial crisis. They've managed to juice it a little bit. China's managed to juice theirs more, and that's because they issued more debt. And now that the United States has turned off the spigot, so to speak, it's settling back into where it was. I think what they've done the last 10 years is they flattened everything out. They've tried to do that. They try to eliminate the business cycle, and they somewhat have succeeded in doing so through debt. It's just there's diminishing returns. How much debt can you issue before it doesn't have the salubrious effect? And China's figuring that out right now. You reach a point where you can borrow 3 times the amount and you get half the result. Then you borrow 4 times the amount and you get no result. Now you got his debt.
Yeah. Now, along with this whole recessionary talk and things of that nature and the response to it, we have this trade war aspect that definitely doesn't help. And so you factor in the economy is slowing down, and then the Fed is concerned with the narrative that and their involvement with all this. Do you think this trade war situation is something that can be ironed out, or will it get worse that will also lead us further down to an unknown pathway that the Fed might have to respond to in a very unfortunate way?
Yeah, well, that's what Powell said. That was kind of the reason that the Fed heads were out last couple of weeks, saying that if there's some fallout from the trade war, this way they can blame Trump and say we had to act. I think if there wasn't a trade war, they'd be saying, no, we're not going to lower interest rates, we're not going to do anything. They want to look like the heroes. They want to look like Trump screwed up, Trump started this trade war, and they've got to help it out. Because before that, they weren't really willing to take their foot off the pedal. And it actually makes sense for them to raise rates. I mean, that is the key, is you try to normalize rates. They know it's almost impossible to do, but they were trying. But now they realize that they don't want to be blamed, and all the other central banks are easing or at zero or at negative. It's very hard for the Fed to keep pushing rates higher.
All right. Well, Louis Cammarosano, I appreciate you sitting down with us today on Silver Doctors and sharing your thoughts on what's going on. Definitely look forward to staying in touch with you, as well as having you back on in the days ahead to kind of get an assessment as to where we're at that current point. But once again, for those that may not be aware, can you leave us with how they can stay in tune with you and follow your work?
Sure. Smallgold.com is the website where I post all of the daily videos that I do every night on YouTube. We have Friday night crypto with Small Gold. We have Saturday night silver with Small Gold. We have Solid Gold Sunday with Small Gold. So I try to, there's a lot of people out there that don't like crypto, don't like silver, don't like gold. It's interesting. There are people that fall into just the silver, just the gold, just the crypto. So during the week, I cover everything, but on the weekends, I try to give people just what they want, and that's on YouTube, also on BitChute, we're on Facebook, we're on Gab, we're on Steemit, pretty much all the social media platforms. So please check us out, smallgold.com.
Sounds good. Well, once again, thanks, Louis. Appreciate you for sitting down with us. Look forward to staying in contact with you. Enjoy the rest of your day.
Thank you.